Hey guys, tax attorney Josh Sells here. Excited to be with you today, and we're going to be talking about what to do if you owe the IRS back tax. What to do if you owe the IRS back tax. Did you know you may not have to pay all of it back? We're going to talk about three different ways today, that you can handle your back tax situation without having to pay all of it back. It is possible, and it does happen quite a bit. So let's get into it. So the IRS, obviously, the very name of the IRS, it strikes fear into the hearts of a lot of people. You get those letters in the mail, right? The classic IRS logo on the envelope. Right? You know what's inside of there. You think that you owe, or maybe you know that you owe, and there's that letter. You are now on the IRS radar. So that can be quite intimidating. I mean, the IRS is one of the biggest agencies of the federal government, and probably one of the most powerful, right? They can take your wages, they can take your vehicles, boats, guns, jewelry, artwork, even real estate in some instances. So very powerful. They can garnish your wages. They can take retirement money. They can take 1099 money. You don't want to mess around with them. So what do you do if you owe the IRS back tax? Number one, IRS offer in compromise. What is that? What's an offer in compromise? You may have heard of it, referred to as the Fresh Start, the IRS Fresh Start Initiative. It is part of that. There are other things that are part of the Fresh Start, but the IRS offer in compromise is a settlement. You owe the IRS $50,000 and you settle for $1,000, and you may be saying to yourself, too good to be true. Now, many times it may be. If you have more cash in the bank than what your tax bill is, you're not going to do an offer in compromise. People come to me and say, hey, I want to do an offer in compromise. I don't want to part ways with the $200,000 I have in my retirement account to pay my $20,000 tax bill. Sorry, Charlie, not going to work. The IRS is going to make you tap into any assets you have to pay down the tax balance first. But let's assume you don't have those kind of assets. You don't have adequate equity in your house. You don't have lump sum amount in a retirement account. You don't have the cash in the bank. As far as assets go, you don't really have a lot of assets. Maybe it's all tied up in your business. Maybe you're just getting into real estate or e-commerce or another self-employed type business model. And so you don't have the assets. What about your income? Because for an offer in compromise, those are the two things that the IRS is going to look at. Income, right? Your household income and your assets. So if we assume for a moment you don't have adequate assets to pay the tax, what about your income? Do you know a family of three with 2 car payments, lease or loan, paying a modest health insurance premium, a family of 3 can make up to $80,000 a year and still qualify for a very aggressive offer in compromise? $80,000. Isn't that, let's think about that for a second. It's not bad money. So $80,000 a year, and you could potentially settle $1 million of back tax for as little as $500. And ask me how I know that. We just did one of those. And so if you owe the IRS back tax and you think there is no way you're ever going to repay that, then an offer in compromise is definitely something that you should look at. A little pro tip here. The IRS has something called financial standards in certain categories like food, clothing, housing, utilities, and they automatically will allow you that financial standard, that amount, to offset your income. Again, remember, we're talking about how to qualify for an offer in compromise. It's income minus expenses. That's how much you have to contribute, and then they annualize that amount. And so you want to get your income reduced as much as possible. So if you go and submit the offer in compromise and you say, well, because of things are tight, we only pay a couple $100 for food and clothing a month. Bad mistake. The IRS automatically gives you, for a family of 3, as an example, about $1,400 a month for food and clothing. And you may say, well, I don't pay anywhere near that. Yeah, join the club. I don't either. And but the IRS automatically gives you that amount each month to offset your income. So if you go and submit the offer in compromise, make sure you look up what those financial standards are, because the IRS allows you to take those automatically without proof, without having to substantiate in certain categories. And so that's kind of a free gift from the IRS for purposes of the offer in compromise, but you have to be aware of that. There are other categories where they do that, such as housing and utilities, vehicles, and out-of-pocket health care costs. So make sure you take a look at that. Another pro tip, you go and submit the offer in compromise, right? You got your paperwork together, and you have copies of your bank statements. They're going to want to see those. And all of the documentation is in order, and you go and submit it. You better make sure that all of your tax returns have been filed. And I'm not just talking about this year's and last year's. I'm talking about going back as far as even 10 years. Part of the requirements for an offer in compromise, you have to be current and compliant. Compliant means that you have all of your outstanding tax returns filed. How do you know? How do you know there's not a year out there where maybe something happened, you forgot to file it? Pull your transcripts. You can actually go onto the IRS website, irs.gov, create an IRS account, and you can view your transcripts year by year and see which years does not have a tax return filed. That's very important. You definitely should do that because the return must be filed or they will not consider the offer in compromise. In fact, they'll reject it if you submit that offer in compromise and you have open returns. I said two things there. I said current and compliant. Compliant means tax returns. Current means if you're self-employed, so if you're a real estate agent, e-commerce professional, or other self-employed individual, you have to make sure that you're current with self-employment tax, those estimated tax payments, that is. And if you're not, they're not going to process your offer in compromise until you get current. And so if you submit it and it's past quarter two, you're going to have quarter one and quarter two of estimated tax paid. Take a look at your last year's tax return. Divide the amount of the tax that you owe, less any estimated payments that you made or payments with the return. Divide that by 4. That's how much your estimated tax is per quarter. And that's what the IRS is going to go by when they determine what your required estimated tax is to be current for purposes of the offer in compromise. So the offer in compromise, great tool. If you owe back tax, again, completely irrelevant to a certain degree what you owe or how much you owe. You could owe $100 million and still settle for a couple hundred if that's what your income and assets allows. Now, of course, the higher the dollar amount, the more scrutiny the IRS is going to give your case. Above $50,000, general counsel at the Treasury Department has to sign off on your case if the IRS is going to do one of these settlements. So you want to make sure your documentation is in order. You want to make sure all those returns are filed. You want to make sure that you are current with estimated tax. And finally, you want to make sure that you are not in bankruptcy. If you're in open bankruptcy, they will not consider your offer in compromise. So that's very important. Your bankruptcy proceedings do need to be closed before you submit the offer in compromise. And you may be saying, well, why can't I just include my tax in my bankruptcy? Some of it may be dischargeable. Some of it's not. We'll be doing one of these episodes pretty soon talking about bankruptcy and taxes, state and federal. So if you are planning on doing a bankruptcy, either do the offer in compromise before or make sure your bankruptcy is closed before you file your offer in compromise. So that is a great tool to be able to eliminate back tax from the IRS. Don't forget, if you have an approved offer in compromise, so you got that great letter in the mail, one of my favorite things to do is when we get those in the mail, calling our clients, letting them know the good news. But if you got that IRS offer in compromise approval letter in the mail, wonderful, awesome, good for you. You have wiped out back tax. You've received that forgiveness from the U.S. government in a sense. Here's an important reminder. For the next 5 years, right? Mark it down, 5 years from the date of acceptance of that offer. You cannot be late with a tax return, and come April 15th, you cannot owe another penny. Okay, you have to make sure that you have any outstanding tax paid by April 15th. So if it's 2021, the year is over, and then 2022, you're getting ready to file, do it early. Do it in February when you get your W-2s or you get your 1099s. Get that return prepared, find out what you owe, and get it paid well before April 15th, and get that return filed well before April 15th. 5 years. What happens if you forget to file and you cross that April 15th deadline? Or maybe you ended up owing a couple $100 and you just thought, oh, I'll file, wait for them to send me an invoice. If it goes past April 15th and it's not paid, the offer and compromise defaults, you owe the back tax, and the IRS may file a judgment against you in federal district court. So don't go that route. If you are one of the winners in that sense, where you have your back tax forgiven through the offer and compromise, don't mess it up. You have to be current and compliant for 5 years after that. And so you want to make sure that you stay on top of that. So that's number one, offer and compromise. Number two, we're talking about what to do if you owe the IRS back tax. What to do if you owe the IRS back tax. Number two is an installment agreement. And that doesn't sound that exciting. I mean, we just talked about a settlement, right? I mean, an installment agreement, boring. But it is an option. You can get on an installment agreement. Most installment agreements are for 72 months. You take your assessed tax, interest, and penalties, what the IRS says you owe. Generally, you add up those amounts that are on the letters you receive, divide by 72, and in most cases, that's going to be your payment amount. Sounds kind of boring. Sounds kind of lame. Not as exciting as a settlement. But the good news is, if you get on an installment agreement, if you have penalties, and we know those penalties can hurt, in some instances as high as 50% of your balance is from penalties, even more is probably from interest. But if you have penalties on your back tax balance and you get an installment agreement set up, it is possible to request an abatement of penalties. The two penalties I'm referring to are the failure to file penalty, that's the late filing penalty, and the failure to pay penalty. Okay, those two penalties can be abated. The easiest way is if this is a one-off occurrence where you've never owed back tax before, you've always been on time with your returns, and you've always paid the balance, and this is a one-time occurrence, then you can qualify for first-time abatement. Now, you can call me, and I'll do it for you for $500. But I'm just messing around with you. All you need to do is just call the IRS. I'll put the number here on the screen. Call the IRS early. Call them early in the morning. Okay, don't wait because the lines get busy. And call the IRS and tell them you want to request a first-time abatement for your penalties. They'll look at your account. They'll verify all your returns are filed that are due. Okay, so got to make sure those returns are filed. They'll make sure you do have an installment agreement set up. So you already have to have that established. And then they'll make sure for whichever year you are requesting that first time abatement. So let's say it was for, we'll say 2017. Okay, you did a retirement withdrawal and you ended up with a back tax balance for 2017. If it's for 2017 where the penalties are, they're going to look at 2016, 2015, and 2014 and make sure that there are no penalties in those years. If you don't have any penalties in the 3 preceding years, you qualify for a first-time abatement. Just by asking the IRS to remove penalties in that scenario, they will. And let's say that your back tax was, you forgot to file the return in 17. You had maybe you didn't forget, maybe you knew it was going to be a doozy, okay, and you had a retirement withdrawal, or maybe that's the first year you went self-employed, and you didn't file the return on time, and you ended up with a $50,000 tax balance. If all the penalties max out, you're looking at $25,000 to $30,000 of penalties on top of that $50,000 in tax. So just by asking the IRS, you can drop your balance by that amount, $25,000, $30,000. Now, interest is not evadable. Under law, you cannot remove interest that has been assessed or accrued on the tax liability. However, interest that has accrued on those penalties will come off when the penalties come off. So that's a great win. So you can see how in that scenario, getting on an installment agreement may not be as exciting as an offer in compromise, but nonetheless, you can still save a lot of money by requesting that first time abate. Now, you may be saying, hey, I got into real estate. I'm a real estate agent, and I've been doing 1099 work for a long time. And every year I've owed tax, and I'm trying to get it straightened around, working with my tax professional, maybe to do an S corporation, trying to do some tax planning, try to get this under control. I don't have 3 years where there were no penalties. Every year has penalties. What can I do? In that scenario, that's called reasonable cause abatement, reasonable cause penalty abatement. So if you have a good reason why the tax wasn't paid or why the returns weren't filed, the IRS will entertain that reason and give you reasonable cause abatement. Here's a little pro tip. Do not call the IRS for reasonable cause abatement. They don't tell us exactly what the dollar threshold is, but I do believe it is less than $1,000. So if you have more than $1,000 of penalties for reasonable cause, don't confuse that with first-time abatement, okay? First-time abatement, there is no limit over the phone. So $30,000 of penalties for first-time abatement, fine, okay? Call them in. But for reasonable cause, if you don't qualify for a first-time abatement, you have to write, okay? Because they will deny it over the phone because of the dollar threshold. So you have to establish that you had reasonable cause for not filing or for late paying, and then they can potentially abate those penalties. Don't forget, same rules apply. All returns must be filed, and you have to have an installment agreement established if that's the route you're going. So talk about what to do when you owe the IRS back tax. We said offer and compromise settlement. Number 2, we set an installment agreement with penalty abatement. And there are other derivations there of an installment agreement. There's different types. Number 3, financial hardship. Maybe you have some equity in your house. Maybe your credit's kind of bad where you're not going to be able to tap into it. So an offer and compromise is out of the question. But a financial hardship. If your income is equal to or less than your allowed expenses for your house. Now remember, allowed expenses. Talking about those financial standards we talked about. So your income is less than or equal to your allowed household expenses. That's the definition of financial hardship for the IRS. They will put your case on a hold. It's called currently not collectible. In that scenario, they will drop all levies. They will drop all garnishment. They will not try to collect the tax from you, and they will basically close your collection case. Now, that's great news if you only have a few years left on the statute of limitations. We don't have time to get into what that means, but potentially if you get into that status where they close your collection case because of a financial hardship, that tax debt can literally fall off at the statute of limitations. Just quickly, the statute of limitations is 10 years from the date the tax was assessed. Generally, we tell folks that's when you filed the return. Okay, and so if you are in that scenario, that may be a great way to get the tax to completely be written off by the IRS. So that's called a financial hardship, currently not collectible status. So those are 3 things you can do if you owe the IRS back tax. Again, an offer and compromise, which is the settlement, an installment agreement with penalty abatement. Don't forget that penalty abatement. Or a financial hardship where you basically tell the IRS, hey, I'm flip-flopped as far as my finances go, and I need my case to be closed, to be put into a currently not collectible status. So if that's you today, if you owe the IRS back tax, you do have options. My recommendation is do something. Okay, don't put your head in the sand. Don't ignore it. The IRS has many tools at its disposal. If you are a tax professional, if you're a CPA, an accountant, an enrolled agent, and you work with folks to prepare their tax returns, my recommendation to you is offer the value here. Offer the value add services. You definitely recommend different options. If you know that your clients are going to owe the IRS, you see their returns before anybody, right? So if there's a large balance, you know now what you can recommend to your clients. If you need any assistance, feel free to reach out to myself or my office. We'd be more than glad to help. So that's what you do if you owe the IRS back tax. So thanks for tuning in to The Tax Attorney, and we look forward to talking to you on our next episode. Thanks for